In 2022, Silicon Valley Bank, SVB, filed its annual report with the Securities and Exchange Commission. The report showed a net income of $2.2 billion and a well-capitalized rating, in line with regulatory capital rules. However, within 2 months of the filing, the bank was closed by regulators due to its insolvency. The collapse of SVB was attributed to many factors, including greed, weak governance, ineffective risk management, and poor risk culture. But one factor that is often overlooked is bad accounting due to the current limits of accounting itself. GAAP, or Generally Accepted Accounting Principles, doesn't require expected losses associated with accepted non-financial risks to be accounted for. So, when extreme and/or injudicious risk-taking leaves a company structurally fragile, GAAP is likely to disclose it as financially sound. This is what risk accounting can solve. Risk accounting is a new field of academic research that addresses the gap in GAAP by quantifying and accounting for non-financial risks. By using risk accounting, SVB could have identified and quantified the risks it was taking and taken steps to mitigate them. For example, SVB could have used risk accounting to monitor and manage the evolution of accepted and mitigated risk exposures, allowing it to continuously optimize the way it does business. The risk accounting method is a collaborative proposition that provides a way for companies to dynamically monitor and manage their risk exposures. By using the risk accounting method, SVB could have avoided the structural fragility that led to its collapse. In fact, based on a projected practical application of the method, SVB could have used a risk accounting-based approach to issue and trade TRUs, or tokenized risk units, to cover its own capital needs. The collapse of SVB was a wake-up call for the banking industry. It showed that traditional accounting methods are not enough to manage the risks that banks face today. But with risk accounting, banks can identify, quantify, and manage their risks, ensuring their financial stability and success. Risk accounting is the future of accounting. And it's time for banks and other industries to embrace it. Risk accounting, turning uncertainty into opportunity.